Hello traders, investors, and crypto enthusiasts. Welcome to our channel where we deliver deep dive analyses, hot news, and reliable projections about the blockchain universe, Web3, and digital money trends. Today, we re-diving into a global warning that could reshape your investment approach. Meanwhile, Bitcoin, the BTC, and cryptocurrencies are gaining strength as alternatives amid traditional market turbulence. Let's explore the three pillars of the crisis, emerging projects, and why crypto might hold the key to protecting your wealth in uncertain times. The World Bank's alert, a crisis defined by three pillars. The World Bank released a June 2024 report echoing as a global alarm for investors. The world economy faces unprecedented risks with growth projected at just 2.3% in 2025, guys, the lowest since 2007, excluding crises like 2008 and 2020. The institution highlights three interconnected challenges driving this slowdown: trade wars. The first threat is the escalation of trade conflicts led by the US, which raised tariffs to century-high levels, triggering retaliatory measures and eroding investor confidence. Global trade, already slowing since 2010, is expected to grow just 1.8% in 2024, half of 2023's rate. The second threat is fiscal fragility. Public deficits have hit historical highs, with debt servicing consuming a third of these shortfalls. Half of low-income countries already face high default risks, limiting their crisis response capacity. In Brazil, for example, the primary deficit surpassed 1.5% of GDP in 2024, while public debt reached 85% of GDP, straining infrastructure and innovation investments. The third threat, less discussed, but equally critical, is climate impact. Prolonged droughts in the Sahel, catastrophic floods in Pakistan, and Pacific cyclones are becoming more frequent. Developing economies like Brazil, India, and South Africa feel these effects acutely as adaptation resources remain scarce. IPCC, Intergovernmental Panel on Climate Change, studies estimate 200 million people could migrate due to climate disasters by 2050, disrupting labor markets and political stability. These three pillars, fragile global trade, unsustainable debt, and climate disasters, create a perfect storm for financial crises. Yet in this chaos, Bitcoin and cryptocurrencies emerge as tangible alternatives for safeguarding wealth. Trade wars and inflation, how Bitcoin offers protection. Average inflation in emerging economies will exceed 6% in 2024, eroding local currencies and purchasing power. In contrast, Bitcoin, with a cap supply of 21 million coins, historically BTC has appreciated during inflationary spikes. In 2021, when Brazil's IPCA hit 12.1%, Bitcoin rose 67% against the real. In 2023, after Argentina's peso collapsed, 100% inflation, BTC set local records with volumes on Binance Argentina surging 300% in 12 months. These examples illustrate why the World Bank mentions inflation 250 times in its report. It is not just a macroeconomic issue, but a threat to social and political stability. Moreover, the proliferation of geopolitical conflicts is driving demand for neutral assets. While global stocks fell 2 to 4%, Bitcoin and Ethereum ETH recovered $40 billion in market value within hours, reinforcing their role as digital gold. For investors, the message is clear. In times of inflation and instability, assets with fixed supply and decentralization are essential tools. BTC in particular protects against monetary depreciation, while ETH grants access to DeFi, decentralized finance, which operates independently of central banks. fiscal fragility, and public debt. Why cryptocurrencies could be the solution. Countries like Argentina, Zambia, and Sri Lanka declared partial defaults in 2023, while Brazil faces similar challenges. In this context, cryptocurrencies offer an escape. Digital assets don't rely on governments or fiscal policies, making them a truly global store of value. In 2022, when the UK hedge fund Terra Capital Partners collapsed after losing $40 billion in a sovereign bond-backed investments, many clients migrated to BTC, protecting part of their assets. That year, the Grayscale Bitcoin Trust, GBTC, attracted $20 billion in institutional capital, showing even large investors are rethinking strategies amid fiscal crises. Additionally, sovereign debt tokenization projects are gaining traction. World Mobile K40 Sharton, for instance, allows developing governments to raise capital via tokens, reducing issuance costs and increasing transparency. In 2023, Bhutan used this model to fund 5G infrastructure, attracting $500 million in foreign investment. Now, with the World Bank warning of new defaults, tokens like K40 and BTC could offer an alternative. Decentralized financial systems less vulnerable to political decisions and confidence crises, climate disasters, and economic insecurity. The role of blockchain technology. The third threat outlined by the World Bank is the rise in climate-related disasters, directly impacting economies reliant on agriculture and natural resources. In 2023, floods in Rio Grande do Sul cost Brazil $50 billion, while droughts in the Sahel led to famine for 10 million people. These events don't just reduce GDP, they increase migration, straining healthcare and education systems in fragile nations. In this scenario, blockchain-based solutions are emerging. Projects like Akash Network, AKT, and World Mobile, K40, are redesigning physical infrastructure using decentralized tokens. K40 builds mobile networks in remote regions, connecting rural communities and enabling financial transactions in climate-impacted areas. ClimateDAO, for instance, lets users buy carbon credits via blockchain, encouraging emission mitigation. For investors, these projects represent not only profit opportunities, but a chance to align portfolios with social and environmental causes. After all, in a world marked by uncertainties, blockchains may be the infrastructure for a more resilient, inclusive economy. Bitcoin Bull, a project combining memcoins and passive income. Among emerging projects, a Bitcoin Bull, BTC Bull, stands out for its bold approach, combining memecoin popularity with utility tied to Bitcoin or S price. The mechanics are simple yet clever. Whenever BTC hits milestones, e.g. 150K, 200K, 250K, the protocol distributes BTC to the largest BTC Bull holders. This project has two clear goals: attract meme coin traders seeking exponential short-term returns. Since its May 2024 pre-sale, BTC Bull has raised $44 million, with daily volumes on Binance hitting 100 million. Its reward those who believe in BTC proposition resonates as analysts like Morgan Creek. However, risks exist. The lack of utility beyond BTC distribution and high volatility make BTC Bull a high-risk asset. Additionally, reliance on a single coin, BTC, may limit resilience in bear markets. Best wallet, token, security, and innovation in the crypto ecosystem. While Bitcoin and tokens like BTC Bull focus on appreciation, projects like Best Wallet Token, Best tackle a fundamental challenge: digital asset security. With exchange and wallet hacks stealing $10 billion in 2023, the need for robust storage solutions is urgent. Best's mechanics are innovative: reduced fees for transactions and staking, accessible only to token holders. Token rewards: users holding Best Gain access to airdrops from new projects listed on Best Wallet. Since its April 2024 launch, Best has attracted 200,000 users with DEX volume surpassing $500 million monthly. Critics question if Best can compete with established wallets like MetaMask and Trust Wallet, which have millions of users. The answer lies in advanced security. While traditional wallets prioritize accessibility, Best adds layers of protection critical in a market where $10 billion was stolen in hacks in 2023. Investing in cryptos during crisis, practical strategies. With the World Bank warning of risks, Bitcoin BTC, store of value with spot ETFs attracting $60 billion in institutional assets under management, AUM. Ethereum, ETH, exposure to DeFi and real-world asset tokenization, RWA, with $30 billion in ETF AUM. Solana, SOL, leverage in memecoins and NFTs with $1.2 billion in monthly volume. BTC Bull, speculative bet on Bitcoin's rally, ideal for traders seeking leverage. Best, protection against security risks and access to premium features. Akash, AKT, exposure to decentralized cloud computing, a sector projected to grow 300% by 2025 per Gartner. Strategy 3, protection with stablecoins and passive income. Stablecoins, USDT, USDC, liquidity to seize volatile market opportunities. Ondo Finance, Ondo, yields of 5% annually in USDC, USDT, outperforming traditional savings. Balancing security and speculation is key. Beginners can prioritize BTC and ETH, while experienced traders explore BTC Bull and Best. Crisis and innovation in the crypto market. Trade wars, unsustainable debt, and climate disasters create FUD in traditional markets. Yet Bitcoin and DeFi projects are consolidating as refugees for investors. BTC Bull and Best exemplify how crypto can adapt to different risk profiles. The former is an emotional bet, ideal for agile traders leveraging Bitcoin's bull run, but the real revolution lies in real-world asset tokenization, RWA, and decentralized infrastructure, DePIN, projects like Realty, real estate tokenization, and Helium, HNT, decentralized 5G networks are reshaping the global economy. While the World Bank calls for international coordination, DeFi shows innovation can come from decentralized initiatives. What do you think? Will Bitcoin become the safe haven of the next decade? Is BTC Bull a valid bet or unnecessary risk? Share your thoughts in the comments. Don't forget to subscribe for real-time updates and join our live streams where we dive deep into charts, news, and blockchain trends. Bitcoin could be a stellar bet, but always assess your risk profile before acting.